You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Thursday, December 6th. 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. First thing to know is Huawei arrest spooks markets. Meng Wanzhou, the chief financial officer at the Chinese smartphone company Huawei and daughter of its founder, was arrested in Canada on Saturday following an extradition request by the U.S. Her arrest is related to an investigation into whether or not she violated sanctions against Iran. China has criticized the U.S. and Canada for the arrest and demanded her immediate release. News of the arrest coming less than a week after U.S. President Donald Trump and his Chinese counterpart Xi Jinping agreed to a 90-day trade truce, threatened to reignite the trade clash between the world's 2 largest economies. Market sentiment had initially been boosted by the trade ceasefire, but the mood quickly soured on skepticism that the 2 sides can reach a substantive deal within the 90-day time frame. Second thing to note today is U.S. futures pointed to a sharply lower pre-open. U.S. stock futures pointed to a sharply lower open on Wall Street, with the Dow futures tumbling more than 450 points as concerns over U.S.-Sino relations and a possible U.S. economic slowdown weighed. Third thing to note today is oil prices slide before the OPEC meeting. Oil prices fell following reports that Saudi Arabia's energy minister proposed a smaller than expected output cut at the upcoming OPEC meeting. Brent crude futures were down $2.40, or around 3.91% to $59.15 per barrel, while WTI crude futures were at $50.88 per barrel. That's down $2.03, or about 3.89%. Oil ministers from the Organization of Petroleum Exporting Countries, Russia, and other major producing countries will meet in Vienna on Thursday and Friday to review their current production agreement, with a decision due Friday. The fourth thing to know today is ADP, ISM, and U.S. jobless claims data is on tap today. Investors were paying close attention to private sector employment numbers ahead of Friday's government non-farm payrolls report. The ADP private sector payrolls numbers were out at 8:15 a.m. Eastern. On average, economists expected that November payrolls to come in at 196,000, down from 227,000 the month before. We'll get a peek at those numbers in a minute. The yen gains as risk aversion rises. The yen strengthened as safe haven demand for the Japanese currency was bolstered by widespread risk aversion in markets. The yen is often sought by investors as a refuge during time of market geopolitical turbulence. Our second story today is also from investing.com. The relentless flattening in the Treasury yield curve has stalled. The seemingly unstoppable flattening of the Treasury yield curve that was widely blamed for the sell-off in global stocks stalled Thursday as investors piled into the shortest dated securities. Unlike Tuesday, two-year notes drove gains as stocks led by the technology sector looked to resume their slide following the arrest of Huawei Technology Company's chief financial officer over potential violations of sanctions on Iran. The rally in bonds took the yield on two-year securities down to the lowest level in almost 3 months. That meant the difference between 2- and 10-year U.S. bonds widened to 13 basis points, the first steepening in 5 trading days. A section of the U.S. yield curve inverted last week for the first time in 11 years, sending jitters through financial markets across the world as investors worried about the possibility of a slowdown in the world's biggest economy. Our third story today is from thetradenews.com. Northern Trust buys FX algo trading platform. Northern Trust has confirmed it has agreed to acquire a foreign exchange software services provider as it seeks to grow its global FX business. The deal will see Northern Trust gain ownership of BEX, which was established in 2013 and is based in Chicago. BEX provides a platform for FX algorithmic trading and a global liquidity aggregator alongside transparency and execution and pricing for institutional clients. In 2016, the $1.1 trillion asset manager entered into a partnership with BEX to collaborate on and develop new FX trading software to be used on Northern Trust's FX trading platform for automation, customized trade execution, and improved transparency. Our next story today is from investing.com. U.S. trade deficit hits a 10-year high in October. The U.S. trade deficit jumped to a 10-year high in October as soybean exports continued to fall and imports of consumer goods rose to a record high, suggesting the Trump administration's tariff-related measures to shrink the trade gap likely have been ineffective. The Commerce Department said on Thursday the trade deficit increased 1.7% to $55.5 billion, the highest level since October of 2008. The trade gap has now widened for 5 straight months. Data for September was revised to show the deficit rising to $54.6 billion instead of the previously reported $54 billion. The politically sensitive goods trade deficit with China surged 7.1% to a record $43.1 billion in October. And our final story today is from MarketWatch.com. Couldn't leave you hanging on this one. Jobless claims fall to 231,000 after Thanksgiving, but still near a 5-month high. The number of Americans applying for unemployment benefits fell slightly at the beginning of December, but they remained near a 5-month high. Initial jobless claims, a rough way to measure layoffs, dropped by 5,000 to a seasonally adjusted 231,000 in the 7 days ended December 1st. That's according to the Labor Department. Economists polled by MarketWatch had forecast a 224,000 reading. And that, ladies and gentlemen, is news you can use for today, Thursday, December 6th, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com. the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.